It's about that time of day again. My name is Joseph. Wednesday evening, March 21st. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off with crude oil, crude is bullish with a strong bull run into the closing bell tonight. That tells me to look for buying opportunities after a two-legged pullback down to key support levels tomorrow morning. S&P is range bound with a bear channel. That tells me to look for selling opportunities up above the top of the range, up above the top of that channel, and I'm going to use that 2-try rule to sell back down to those lows tomorrow morning. Nasdaq also range bound with a beautiful triangle pattern setting up for tomorrow, and that of course tells us to focus on failures around the swings, around the pivots on that chart for tomorrow. I'm going to grab those swings and show you that in a moment on the Nasdaq. Over to the gold, the yellow metal is bullish with a strong run higher this afternoon, telling me the most reliable buying opportunities will be after a two-legged pullback and looking to buy off support levels for another leg higher tomorrow. Wrapping up tonight on the euro is bullish with a big wedge pattern, but the range is really tiny on that wedge, so I'm watching for a pullback, and I've got my eye on a hidden channel level tomorrow morning on the euro. Boy, we got a great setup setting up for Thursday's session. We had some big news from the FOMC and the inventory report today, and we're looking for either continuation or possibly a reversal of that move for tomorrow. I got a great video. We're going to put this plan together for Thursday's session in just a few moments. Before we jump in, though, I do want to remind you, if you're watching this evening on YouTube, you can find a detailed description of this strategy on my blog at sidewaysmarkets.com. I'll put the links in the description of that YouTube video. Also on YouTube, if you got any questions about anything covered in this video, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post a new video. And if you really want to stay in tune with everything going on here at schooloftrade.com, head over to the Sideways Markets blog. This is our trading blog where all the action happens every day. And while you're here, make sure you join our mailing list. I'll shoot you an email anytime something new happens here at SOT, right? That way you're always in the loop. And don't forget, while you're here, I'm always posting exclusive content on my social media channels. Follow me on social media in the lower left-hand corner for charts, links, and updates throughout the week. And then speaking of charts, how easy is this? All the charts from tonight's video, that's right, you can have them on your computer for tomorrow, right where it says click here to download today's charts. Grab those charts and be ready for tomorrow's session. And speaking of tomorrow's session, upper right-hand corner, make sure you grab that free pass. If you're not a member here at School of Trade, either take my free trial or grab that free pass in the upper right-hand corner and come out and join me as a guest in the trade room this week and see what we're all about. As always, if you got any questions, I've got live support on the right-hand side of our website. And don't forget, you can always drop those comments in the comment section below the YouTube video. All right, hope you guys had a great FOMC day. We survived the inventory report. We survived the FOMC announcement. Now the real fun starts for tomorrow. Tomorrow's a day where we either see a continuation, a range, or a reversal. We saw a lot of big moves. Gold, euro, crude oil, big moves today. Do we go range bound tomorrow? Do we continue tomorrow? Or do we reverse tomorrow? Tomorrow is going to be a big, big day. You thought the moves were big today. Tomorrow's the follow-up day when most professionals get back to their desks and put their money to work in the market. We also got some beautiful ranges setting up on the E-minis. Will tomorrow be the day we finally break out? Could definitely possibility be for tomorrow. So we got a lot coming tomorrow, the day after the FOMC announcement. See, most experienced traders, they don't mess around with the FOMC report. They wait for the day after because it's a lot easier to make their money, and usually the moves are just as dramatic. Now, digging into tomorrow's session, Thursday, March the 22nd, all we really have is jobless claims at 8:30, and composite PMI flash at 9:45. So really only two relatively minor news reports. I don't expect these to be too big of a market moving event tomorrow morning. I would expect the wake of this FOMC announcement to be really the most important context for tomorrow. At the same time, we are watching a big blizzard, a big nor'easter pummel the upper northeast of the country. So we'll see if that might affect us tomorrow as well with some low volume. But I do expect tomorrow to be a relatively active day as traders come back to their desks with a good night's sleep and ready to go to battle tomorrow, right, on our favorite markets. Don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time with all of our advanced members, and we're going to execute that strategy together. So 8:30 and 9:45 a.m. Eastern time, and of course, don't forget about that 10 o'clock shock, right? Always expect that big volatility burst at 10 a.m. Eastern time. And then, of course, we're going to Friday session after that, so don't forget to come back and stop by tomorrow night's newsletter, and we'll put the plan together for that beautiful durable goods orders and new home sales 1-2 punch on Friday morning. We'll talk about that tomorrow night on the newsletter. For now, though, let's jump right in and let's grab a look at these charts setting up for Thursday's session. I'm going to go crude oil, S&P, Nasdaq, gold, and we'll wrap up on the mighty euro, which is a really interesting chart and a lot of great learning and earning opportunities setting up for tomorrow's session. Crude is bullish with a strong bull move in today's session, all the way up to the triple measured move target. And as you can see, literally closing right on its highs. A very strong sentiment here for the crude oil futures. Anytime I see a strong move in one direction, this one even closed right at its highs, I know that a two-legged pullback and a retest of that high is highly likely for tomorrow. So I'm looking left, I have a triangle, I have a battle zone, we got some prior swings, I'm identifying some key support levels, and I'm waiting for the pullback tomorrow morning. Beautiful example on this chart. You're going to see a couple big moves like this today, one off the euro, one off the gold, and you can see here, 1, 2, 3 legs higher, beautiful bull channel, right, and literally finishing the day right at its high of day. I also have a little bit of a triangle that we saw here, right, just before the closing bell here today, and that is definitely piquing my interest for that pullback tomorrow. Now, I think the most important thing about this chart, it's a strong move in one direction. We had the inventory report today. Combine that with the FOMC, and that produces a big, strong move. Most of the time, the vast majority of the time, anytime we see a strong move up, we see a two-legged pullback and a retest of that high. So that's my goal for tomorrow. All I really know right now is I'm expecting that two-legged pullback and a retest of that high. And to get there, I'm marking up some key levels of support around this triangle. I'm marking up key levels of support around the battle zone. And of course, this possibility here we keep going higher as well, right? And I can look for the continuation from there. So let's play that game. What if price goes up? What if price goes down? And what if price goes sideways, right? Let's get this under control for tomorrow. That way we know exactly what the plan is no matter what happens. First of all, I'm expecting to see a pullback. I'd like to see a two-legged pullback and a retest of that high. Pull back, two legs, failure, strength, pull back, retest that high, right? This is the simple pattern, right? Failure at the moving average, strength, and then pull back up to retest that high. That'll be the most reliable opportunity there for tomorrow. Now, I don't know how far it will pull back. I have to wait until we pull back to a level of support. Then we'll look for that failure into strength into pullback, and a pullback back up to retest that high. What if we go sideways here? What if we pull back right back to the top, and tomorrow morning we come in and we're seeing this, right? Keep an eye out now for a bull market into a trading range. So what do we do here? We look for that 2-try rule below the low of the range. 1 try, 2 try, buy down below that low. 1 try, 2 try, buy below the low of that range. Then up top above that range, I want that moving average coming over, and I can buy pullbacks if we can get above, right? If we can get above that high. 2 opportunities tomorrow if we get a range-bound market. And how would we know if we get a range-bound market? We know we get a range-bound market because we'll see a double top at that high. Once you see that double top at the high, then your focus is let's buy off of that low, right? Again, or buying the pullback up above that high, right, tomorrow morning. Last but not least, what if price goes higher? What if price goes higher? Well, we have a great looking channel, so if price goes higher here, I'm still looking for that pullback. If price goes higher, I'm still looking to buy at support. So if we continue to go higher here, look for that test of the top of that channel, and then of course I'll be looking at these as additional levels of support, right? And I'll be looking for buying opportunities, get that moving average up, right? Buying opportunities going back up to retest that high. If things really get out of control, right? If we really start running here in the overnight, right? If we just ignore the top of that channel, then your job is going to be look left, find those swings, and try to grab that trap low on the way up to that prior month high. Big milestone waiting up top there, right? Just around that 66.30 area, right? That prior month high is at the 29 level. So we're definitely looking good here for the buyers right now. A very strong sentiment here on the chart. Again, two-legged pullback, back up to retest the high. If we go sideways, focus on failures or a strong breakout pullback. If we keep going higher here, you focus on buying off of support, right? Resist that temptation to buy into the high of that range, because eventually we will see this market start to pull back for us. Even with the strong sentiment we see today, this could easily go higher and then a nice sharp pullback tomorrow. So stay patient for it. Boy, how about that range we saw today on both of the E-minis over now to the S&P. S&P is range bound, and the momentum of this market is swinging back down to the low of this range. So my plan is to keep looking for failures using the measured move and the pendulum swing for areas of interest tomorrow morning. Yeah, this is the same range we talked about in last night's newsletter, right? We were digging in looking for buying opportunities down to the low, right, pretty much all morning today on the S&P. We ended up, of course, once the news comes out, one try, two try, and back down into that range. You'll notice I've got the trading range, and then I've measured the amount of the break higher, and I'm projecting that down to the opposite side. You'll also notice that lines up conveniently here with a measured move, right? That measured move down at that 2701, 2701 half area. So you combine that measured move along with that pendulum swing, and you've got yourself a great area of interest down here to look for pretty much the same, probably not as dramatic, but the same type of pattern we saw off the high. Strong move down, that's one try, two try, and then back up into that range. Remember, anytime I see a trading range, anytime I see a flat, balanced trading range, my goal is to use that two-try rule. One try to break out, two tries to break out, failure back in. One try to break out, two tries to break out, failure back in, right? Look for that two-try rule going higher. Look for that two-try rule going lower, and fade those breakouts, staying away from the middle, buying low, selling high, and who knows, maybe tomorrow we finally get a break out of this range, but it's going to be difficult to the downside because we have that big move lower, if you recall, from earlier on this week, waiting down there to act as support. I'll tell you right now, I really like the way this chart looks. I know most people will look at this and say it's an ugly chart, it's a range-bound market, but there's a lot of good opportunities here to be a trader on this. Up, one try, two try, back down into that range, down, right? You got the pendulum swing, you got the measured move, you got that low, right? One try, two try, back up in. Just focus on those failures. Keep following this plan this week. And remember, you don't need to be all the way down here, right? I'll take it here. One try, two try, back up into that range. One try, two try, back down into that range, right? We were looking for buying opportunities this morning off the low of that range, right? It doesn't need to be down way outside that range, right? I would like it to be down. I'd like to be outside the range, but in all reality, rolling around this range high to range low, failures, right? Keep looking for those buy opportunities lows, sell opportunities to highs, and avoid that middle. What would a breakout look like, by the way? What would a successful breakout look like? Well, we talk about the two-try rule, right? And so when we see the price go up for one try, moving average comes over, second try, right? If I see that second try explode higher here, right? In other words, instead of the second try failing, instead of going up and then back down in, right? Instead of that second try failing, if we see the second try just explode higher here, well, that tells us now we have a successful range breakout, and we have to go out and start drawing our new channel, find our new measured move, right? And we'll go looking for buying opportunities going in whatever direction. Be careful, be careful, be careful down around these lows, because again, as I mentioned earlier, that big round number combined with that double down from earlier this week, that is going to be a big area for profit taking. Unless we see a ton of strength going through that low, I need to be careful selling into that major level of support. So pretty simple strategy there for the S&P tomorrow. It is ultimately the same thing on the Nasdaq. Nasdaq has a beautiful triangle though, as you'll notice as I kind of zoom out on this chart right now. You'll notice right now the Nasdaq is also range bound with a triangle pattern. I've got this higher low, I've got that lower high, and of course you've got your trading range there from earlier on this week as well. So pretty easy to see there. Once again, you can take the size, right? The size of that move up, combine that with the size of that move down, right? And that of course tells you, yeah, it's no surprise, right? Pendulum swings up, pendulum swings down. You can see how that pendulum swing example works on the Nasdaq. And this is not just the E-minis. This little technique will work on pretty much everything. But basically the size of that range, the amount we break out, and of course, I'm going to see this thing back up, back down, back up, back down, right? And look for those failures back and forth we go. We're coming off the low right now, so I'd like to go back up, one try and two try, much as we saw back here, one try, two try, and then back down into that range. One try, two try, back up into that range. Keep focused on buying that low. Keep focused on selling those highs. And of course, not as easy to find that channel here on this one. There wasn't much of a channel we could use on this one. The S&P definitely has a bit of a bear channel there. We do, however, though, have a measured move, and that measured move puts us just below that 68.21 half area, which is that low. So much like the S&P, we really got to be careful down around these lows, because those lows will obviously act as major support, and it'd be a great place for profit taking for those sellers, right? So stay away from the middle. Fade those breakouts, one try, two try, back up in. You got that trend line coming down overhead, trend line coming up right from below. One try, two try, right back in again, right? So pretty simple strategy there. Just make sure you're aware, right? If we do see a strong break higher here, don't be so sure about buying that pullback until we see that strength move going higher. Once we see that strength going higher, then we know we can successfully look for, right, that new bull market. Because a lot of times we see strong moves up, right, and they pull back and they fizzle out and go right back in, much as we saw back here, right? Strong move down, they pull back, and of course buyers are waiting right there, right, to buy that going back up into that range. So fade those breakouts. Buying low, selling high, avoid that middle, two-try rule, pendulum swing, right? This is all the same stuff we talk about every night on this newsletter, and we are getting all of it, right, being put to work here for tomorrow. So watch the measured moves. Again, be careful down here, because you got that big low at 28.5 area. So it may look real strong, but we may end up coming right back up into that range. So be very, very careful chasing that move going lower. Make sure you understand the big picture here on the Nasdaq going for tomorrow. We might see this breakout tomorrow. We may see it tomorrow. We'll see. We know that we have, again, FOMC day. A lot of times the day after FOMC, that's when people come back and they really put their weight into things, they put their money to work, and we start seeing some big moves here. So looking forward to a potential real active day tomorrow on the E-minis. How about some gold? The yellow metal is bullish with a channel and a strong move into the closing bell this evening. And anytime I see a strong move in one direction, I know to look for a two-legged pullback and a retest of the high tomorrow morning. Knowing this, my goal is to use the low of this channel combined with the battle zone for reliable buying opportunities tomorrow morning. This chart looks just like oil, doesn't it? Big strong move into the close, up to its measured move target, sitting a little bit up over that high, right? Big strong move into resistance. We know the plan for this one. I want to see that two-legged pullback and a retest of that high. How far will it pull back? That's a good question. I want to buy at support. And in all reality, this support level could be as early as that 29.8 swing. We could see a two-legged pullback. Moving average comes over. Sellers try to sell the retracement there. They fail. That leads to a pullback and, of course, the buy back up to retest that high. Right, so we'd love to see a seller failure down below that moving average. Right, we can see lots of examples of seller failures throughout the day. Right, on this chart though, we want to get below that moving average. I've got my eye on this high, 1328. This, of course, was the byproduct of the FOMC announcement this afternoon, right? Very, very choppy, sloppy session there. A lot of times, whenever you see the market get all chopped up like that, it becomes a bit of a price magnet, and we get that pullback down to that area, almost as if to let buyers get in case they weren't able, to get involved back earlier in that move. So that would definitely be, a great opportunity here for us. And again, possibly a little more dramatic. Again, oftentimes we see these big moves here the day after, moving average comes over, failure, strength, pull back and back up from there, or maybe it's just simply below the moving average. Sellers try to sell that retracement. Again, if they can sell that on strength, they get control of the market, and then of course back up from there we go. So that's what if price goes, price pulls back. Also, big strong move. We open up here in a few hours here in the Asian session. What if we end up going sideways? How do we know we're going sideways? We see a double top, That double top, that's how we know, That's how we know we're going sideways. So if we see that double top at the highs, now look for that one try, two try, and then back up in, one try, two try, back up into that range, or moving average comes up, We get that breakout pullback as we go, as we go higher. You'll notice, we have a couple levels waiting up here on the gold, that 1342. You can also do this, measure this move. That was your two-legged move, That was your two-legged move. And then, of course, as deep, whatever the pullback is, let's say we pull back all the way to that low, Then your next measured leg will be up here, That'll be your triple measured move, Does that make sense, So measure the same size, Measure the size of that measured move, and then that will become your triple measured move going higher here, going higher here for tomorrow. So a pretty interesting scenario there, Again, the key is that strong move higher. Anytime we see that strong move higher, we know we're going to be looking for that two-legged pullback and a retest of that high. Now, what if we keep going higher here? What if we keep on just blasting higher here right now? Well, if that's the case, then this will become kind of a spike in channel. And for a spike in channel, we know, look left, find those prior swings, and wait for that, Wait for that pullback, So relatively simple if it keeps going higher, Again, I'm not going to buy the high. I'm going to wait to buy that pullback, as it keeps going higher there tomorrow. Last but not least, how do we reverse? Oh, this could definitely reverse. We see a big move on gold in the wake of FOMC. Yeah, absolutely. This is ripe for a reversal. The problem is we need to see proof first. So strength, pullback, strength, Got to see strength going lower. That's the first step. Strength going lower, Pull back to the moving average. And then remember, it's not enough to just get a pull back to the moving average. Now I need to see another leg through. If I can get that second leg lower, now I can connect the dots, bring that down, find that new channel, and look for a sell up off the high of that channel. It's a relatively simple idea there, Relatively simple idea is to get that, To get that channel, coming off of those new lows. So pretty easy there, but again, you got to see that strong move down. Moving average comes over, and remember, if those bears, if they can't hold it, it's going to go right back to retest that high, so watch out for that, You can't get too aggressive on that. Wait for that move lower, find that new hidden channel, and blast off from there. We saw a great example of that today, when we saw that strong move up, breakout, retest, right? Able to connect those two highs, right? And grab that pullback, right? Earlier on in today's session. So it was a pretty easy reversal we saw. Again, if you were looking for it and you watched last night's newsletter, you were locked and loaded there on the yellow metal. Last but not least here, over to a very interesting chart over on the euro. Euro is bullish with a wedge pattern. And as this wedge gets narrower, I start to anticipate a pullback off the highs to give buyers more space to work with. Knowing this, I'm watching for a hidden channel to use as support for buying opportunities going back up to retest the highs and the measured move tomorrow morning. As you can see, the euro doesn't look nearly as clean cut as the gold does. But the one thing you can see is, right, just forget about that mess around the FOMC announcement, right? FOMC announcement comes up. This is why you don't want to trade the FOMC, right? Goes up. If you bought some sucker, some poor, look at this. Some poor soul actually bought one tick above that candle high, and all hell broke loose afterwards, right? This is why you don't want to chase after big news events, because you just never know if they're going to keep going or not, right? You chase after it, you get stopped out, just see it go right without you, right, in the direction you initially had anticipated. So this is why I always tell people, stay away from the news events. I know they look enticing. I know for a new trader, it seems like that's the easy money. The problem, though, is whatever money you make by gambling on news events, you'll usually give it back 2 or 3-fold, right, the next time you sort of do it. It's very difficult to be consistently profitable by trading news events. Maybe you've got some special technique, but the vast majority of traders will have a difficult time making consistent profit, right? Again, I won't argue with you if you say, well, yeah, well, I've made money on news before. Well, sure, so have I. But I gave it back a week later when I tried to do the same thing again. That's the problem, right? It's difficult to make money consistently over it. You can get lucky a couple times, but it's difficult to get lucky every day over a long-term career. So, most important thing right now is nice, strong one-leg, two-leg move up. I've got that measured move waiting overhead. And that measured move lines up just below that high, right, from what is that, Wednesday, Tuesday, right, Monday's high, right, so first day of the week, right, Monday's high, and then, of course, they can keep pushing. Another big target up here, just about that 25,000, big round numbers, a big target up there, up around that big round number, 25,000 as well. So keep an eye on that tomorrow if we can get a nice continuation of this move. I think the only thing we really know on this right now is the bulls have control. The bulls have control. We know that for a fact. I'm connecting these highs. I'm connecting these lows, and this gives me a wedge. Now, wedges are really important patterns. They don't happen very often. They're relatively rare. Channels are more common, a lot more common. The problem with a wedge, well, wedges are great because when the wedge is really wide, you can trade inside the wedge. But once the wedge starts getting narrow, right? See how narrow the wedge is right now? There's not much space inside that wedge anymore, is there? And when you've got resistance and support and it's all kind of crammed in there, nobody can make any money doing this, right? It's a dangerous area to be trading. So whenever I see a wedge like this, and whenever I see we're getting this really narrow point of the wedge, I expect to see a nice pullback and a retest of that high. So wedges are great if you get to them early because you can trade inside that wedge, buying low, selling high, and using rotation back and forth from support to resistance. But once that wedge gets really narrow, right, once it gets all tough to trade inside of it, right, that's when you know it's time, right, to anticipate the pullback, right? So how do you know when to predict the pullback? Once there isn't very much space for the buyers to participate anymore. Remember, if you're a buyer, I'm a buyer, all the buyers, they want to make money. And so if there's a resistance level right in their way, they're going to be hesitant to buy there. So once you start seeing the bull market start to get too close to those levels of resistance, those well-known levels of resistance, measured moves, range highs, channel highs, right, wedge highs, that's when you know a pullback is likely going to be coming your way. So we're expecting one right now. Now, good question. Where do we think the pullback will go to? I'm glad you asked. Let's take those two highs and let's line them up at these lows. And this looks like we might have a beautiful little hidden channel here waiting, right, for a nice pullback to buy off of that low. Or maybe we go a little bit deeper, right? Maybe we really stretch our legs a little bit, right? Maybe see a nice deep pullback here down to the low of that, right, larger channel. Two-legged pullback, right? Failure, strength, pullback, and back up, right? Wouldn't that be great? Now, if we do get that deep pullback now this will become this will become a larger, right, measured move. So we do get a deep pullback, right, that'll be a larger measured move because it will have taken out, right, that prior swing. So make sure you're aware of that for tomorrow. So I've got my eyes on this swing, right, on that, right, and that's definitely where I'm looking for those buying opportunities tomorrow, right? And a great example of how a wedge, or really any chart pattern, as long as you know what you're looking for, will tell you how to predict or how to anticipate when that pullback will happen. And then look for those well-known, easy to find levels of support, and use levels of support, right, to buy that pullback here. So again, looking to go down below that moving average, down to that swing, failure, strength to pull back up. What if we keep going higher here? Yeah, what if we keep going higher? So we know we're doing if we pull back here, we keep going higher. We keep going higher here. I'm still waiting now, right, for that pullback and a retest. Remember, eventually this market will pull back, right? And it'll probably pull back right when you start buying high, right? That's the way it goes, isn't it? The markets have a sick sense of humor, don't they? Right when you say, oh, heck with this, I'm going to buy, right? That's when it's going to pull back on you. So stay patient for it, right? I'm not kidding. I know it feels like the markets are watching us sometimes, right? They're eerie with that stuff sometimes. Let's see here. What if we go sideways? What if we pull back, double top here? Yeah, sometimes we may see a move like this, FOMC today. We may be a little bit paralyzed tomorrow. Once we see double tops here, then we know trading range, right? 1 try, 2 try. Again, I'm still going to use these support levels. I'm still going to try to use these support levels for it, and then back up in. And then if we get that strong break higher from there, then we can look for that move, right, and be a buyer up above that high. All right, guys. How do we turn bearish tomorrow? What's the reversal look like? You got it. Strength, pullback, strength. I don't care where it happens. I don't care when it happens. All I care about is a strong move down. Moving average comes over. They pull back to the moving average and they run through. Okay, because what that run tells you is that the buyers in the market are now becoming sellers. Now, how would that happen? Buyers become sellers when they get out of their long positions, right? They liquidate their longs, right? They sell their way out of their long positions. Once you see that real strong, sharp move, grab that trend line, grab that hidden channel, right, and be ready, because these usually move pretty fast. You be ready for them, right, and get ready for that sell back down again, right? Bears, of course, trying to get back down to retest that low. Bulls are trying to get a pullback and retest that high. And again, I don't want to say 25,000. We got a big level up there, right? That big round number. That's going to definitely be on our radar tomorrow if we can get up above, right, this measured move and show some continuation on strength. All right, guys, predicting pullbacks. Hope you guys learn more about the strategy for today. It's been a fantastic 4th week of the month of March. Hope you guys are having a great week along with me. Hope you're learning and earning right along with me here on this nightly newsletter. Please don't forget, make sure you subscribe to our YouTube channel. Hit the bell icon so you get notified every time I post a new video. And if you want to learn all about our trading strategy, all of our analysis, all of our patterns, grab that free trial. It's right on the homepage at schooloftrade.com. I'll put all the links in the description of that YouTube video. And while you're here, don't forget, we get a great beginner, intermediate, and advanced classes, right? We are the very best in the business. We've been doing this newsletter for almost 10 years now here on this YouTube channel. It is insane to think how fast that time has flown by. And don't forget, any questions, if you got any questions for me, drop them in the comments section below the video or hit me up on live support on the right-hand side of our website. Big day tomorrow. I'm excited for tomorrow's session. Are you with me tomorrow in the trade room? 8 o'clock Eastern time with all the advanced members. I look forward to seeing you there. If not, we'll do it all again. Same time, same place tomorrow afternoon. Adios, amigos. Bye-bye for now.